Welcome back to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm really pleased to have with me, once again, a favorite of this show, Alasdair Macleod. Alasdair has a background as a stockbroker, banker, economist. He is a senior fellow at GoldMoney Foundation, and his weekly articles written for GoldMoney are posted on his blog and at that site at GoldMoney as well. You can see them there. You can easily access Alasdair's work through J. Taylor Media, GoldMoney. There's a very convenient link right at the top of our website at jtaylormedia.com. Thank you for joining me again, Alasdair. It's always good to have you with us.
That's my pleasure, Jay.
It's really good to have you, and thanks for staying up so late. I know it's near your bedtime over there in England, so it's very kind of you to make yourself available at such an inopportune hour of the day. But I want to focus today on your recent article that appeared in at GoldMoney titled "Cryptos May Destabilize Fiat," and you stated you started out that article written on November 9th by stating, and I quote, "The assumption in some quarters is that cryptocurrencies will replace gold as money, or at least challenge it. This is an error born out of a misunderstanding of the theory of exchange." So I'd like to ask you, can you explain the theory of exchange and how that contrasts with the line of thinking of those who think cryptocurrencies will overtake gold as money?
Yes, certainly. The theory of exchange basically deals with the relationship between goods and services and money. Obviously, people produce goods and services. They sell them to consumers in return for money, and money is the temporary storage, if you like, of goods, in effect, because if you sell something for money, then basically what you're doing is you are taking something in exchange which can be exchanged for something else. That is how the division of labor works. So the theory of exchange is all really about how that works, and particularly the validity of the money that is accepted between exchanging parties. Mm-hmm. And the important point about that is that over a very long history, since barter effectively sort of receded into the background and then more or less stopped, people have, between themselves, determined the form of money which satisfies them most. Mm-hmm. And the one that has endured through the centuries and through the millennia, in fact, is actually gold and silver as well. But nowadays, particularly, we think in terms of gold. So gold is real money in a way in which even fiat currencies are not real money. Fiat currencies took their validity by referring to gold or silver. A pound, the sterling pound, the British pound, was originally a pound of silver. Dollars, thalers, whatever, they were all a measure of physical metal, if you like, either gold or silver. And about the only modern currency which doesn't have this basis in it is the euro. The euro is actually just sort of one step removed, because the euro was comprised of national currencies, mm-hmm. which were put together into one common currency, so that you exchange your Deutschmarks, your French francs, your Italian lira, and your Spanish pesetas for euros. But with the exception of the euro, all currencies refer back to gold or silver. Now, it is from that they get their validity. But that validity is obviously very, very questionable. We now have cryptocurrencies, which have been invented as an alternative, in effect, to the infinitely expandable fiat currencies. And the cryptocurrencies, if you like, were sort of seen as a substitute for government currencies. And there is some sense in that, insofar as cryptocurrencies are not money. But if you're going to try and pretend it's money, then you really try and replace the weakest kid on the block, and that is the fiat currency. Mm-hmm. But we've now morphed into a stage where cryptocurrencies are really not money. They're just purely a medium for speculation. I wouldn't say that two consenting adults trading with one another might not accept Bitcoin or Ethereum in exchange for something else. But in general terms, these are not circulating as money. What they are is essentially a medium for speculation, and a very effective medium of speculation. And I likened them to, if you like, the tulip bubble, but without the tulip bulbs. It is even purer than that, if you like. Yeah. So if you accept that premise, then really to try and understand cryptocurrencies and how this is likely to evolve, you've got to understand the psychology that drives bubbles, the psychology that drives bull markets. And there was a book written a long time ago, I think it was in the 19th century, by someone called Charles Mackay, who examined bubbles of the past, the madness of crowds, the complete irrational behavior that people enter into when they just see profit. And that, if you like, is the bubble mentality. That's what we have. Now, a bubble goes through basically three phases. It's the same with a bull market, which a bull market is basically, if you like, it's exactly the same genre as a bubble. A bubble is just more extreme. It's rather like socialism to communism, if you like. So if you look at the structure of a bull market and a bubble, then it starts off usually with a few insiders understanding what's going on, promoting this new idea, if it's a new technology or something like that. And in this case, you've got the geeks, if you like. But what they have is something actually which is a lot more powerful than most other things, because you've got a combination of technology and finance, and putting those two together actually makes it potentially quite a lot more powerful. So if you look at Bitcoin, it's gone from zero to $8,100 tonight, something of that order. Yeah. Now that to me is very much a first stage. It may go no further. This we don't know. But the next stage, if it happens, is when the institutions start to get involved. Now, in this context, it's very important that COMEX has announced that it will be introducing a Bitcoin future by the end of this year. And it will work on a reference price rather than being deliverable in Bitcoins. This is very interesting because suddenly the hedge funds and maybe the more adventurous family offices now will now have a regulated investment which they can play in. And undoubtedly, if this future is successful, there will be other futures exchanges introducing similar instruments, and not just in Bitcoin, but over the coming year or so, they will probably do it for Ethereum and various other credible cryptocurrencies as well. So you can see how this becomes mainstream. And now we've got, I don't know how much money there is potentially overhanging this market from the institutions, but you've got the potential of unlocking $1 trillion or $2 trillion at least from the institutions into a market where there is no supply. And this is the key thing. The supply is only in terms of new currencies, new cryptocurrencies being issued and being credible. I mean, we've already got something like 1,000 of these things, but really very few of them are credible. So the bubble marches on, if you like, through the second phase. The third phase, which is the one that always captures the attention in history, is when the public start to get involved. The public know only one thing. These things are going up. It's a surefire way to make money. This is, if you like 1929 in the stock market. It's like the South Sea bubble. It's like the Mississippi bubble. It's like the tulip bubble. This is the phase, if you like, that goes down in the history books. So that is 2 stages ahead of where we are. We're at the end of phase 1, by my estimation. We got phase 2, we got phase 3. Now, various things can happen to interrupt this. Governments might decide that this is something they don't want to see and ban it. You already see that countries which have exchange controls and try and contain capital flows are very, very suspicious of this, and they see it as upsetting the way in which they manage their currencies. So China and various other countries, I should think, will continue to try and clamp down on dealings in cryptocurrencies. I think that the main mainstream countries like the United States, Canada, Europe, UK, and any sort of fairly developed financial economy probably just doesn't know how to deal with this. I'm looking at it from the government point of view. They see blockchain, which is innovative and very, very clever and very, very useful. It's a self-auditing process, which means that property rights can be established and traced. This is useful to governments. They can adapt it and really use it. And we're seeing a lot of research being done, partly through central banks, but also markets and so on and so forth, for different applications for blockchain technology. But when it comes to the individual cryptocurrencies, I kid you not, the central banks just do not know what to do. They'll sit there and they will look at it. Now, I think it is quite possible that down the road, governments will take the view, well, we don't know, but people seem to be making money on this. It makes it very hard for us to stop it because you're just going to have an awful lot of discontented voters. So perhaps we can tax it. And of course, where you've got capital gains tax, this is income to governments, which is very, very needed. So you can see how this thing is likely to become not only mainstream, but accepted by governments. Now, here's the rub. If you compare this with bubbles in the past, like the South Sea bubble, there's probably 10,000, 20,000 people involved in the South Sea bubble. That was all. Here we have, courtesy of bank accounts around the world, internet technology, mobile phones, the potential market for this is so much greater than we've seen for any bubble in history so far. So this is a very, very interesting point. Where does this stop? You can see how this is going to develop, but you cannot really see how it's going to stop. And I think this is where this comparison with gold and fiat currencies really comes in. There will come a point where this bubble destabilizes fiat currencies. Of that, I have no doubt whatsoever. At that point, the central banks will wake up. They will be forced to raise interest rates. That is, if the credit cycle, the existing credit cycle, hasn't done it already. They will be forced to raise interest rates to the point where the bubble bursts. And when bubbles burst, they don't do it gently. They do it very, very violently. So we've got that some way ahead of us. So this, to me, I can just see, my great-grandson maybe, if he's interested in economics in some stage in the future, he's yet to be born, by the way, he will study this phenomenon and think, this is really the most extraordinary bubble in history. It is a case which is worthy of the study. It is a case which I'm going to write a PhD dissertation on. I can see this being so fascinating. It's going to take over in terms of purity where Charles Mackay left off with his Madness of Crowds.
Yeah. Very interesting. It certainly is possible, but I know that you wrote in a prior article, you said cryptocurrencies are the purest form of financial bubble in the history of speculation and will be of great theoretical interest to future generations, which is just what you're saying. And a phenomenon like the Mississippi South Sea and the tulip bubbles and so forth and so on. But help me understand, Alasdair, how the dynamics of what causes this destabilization. You and I have talked about the credit cycle and how the bank's financial system is now needing to raise rates. I would argue perhaps that rates are going to rise whether or not the Federal Reserve and other central banks want them to. Whether the Fed is responsible or not, I guess they can clamp down on the money supply, control the supply of money, and in that way have a hand in forcing rates higher. But help me understand exactly, well, first of all, I guess if we're in the first phase of this development here, and Bitcoin, for example, is at $8,000 plus, and it's just a very small percentage of people that have gotten into it. And by the way, I saw a statistic yesterday, I think it was, that only 39% of Bitcoin owners believe that it is a bubble at this stage. It seems like we could see numbers that are much, much higher than $8,000. So it might be a pretty safe speculation for a while to put a few of your dollars into, if you're so inclined.
Well, yes. I mean, I don't give investment advice. I'm just looking at this with fascination, if you like, as an economist. I mean, the point about economics is that it's a study of human behavior, and it's the human behavior aspect of it which I find so fascinating. And I would rather restrict what I'm talking about to that, because I'm not an expert in cryptocurrencies. Yeah. What I can see, however, are these characteristics which are common with the bubbles through history. It is an essentially human behavior. Getting back to your point, yes. You and I have discussed how rising interest rates are likely to destabilize the credit cycle. It always happens. People think there's a business cycle. It's not. It's a credit cycle. And central banks, for some reason, don't actually seem to understand that the credit cycle is something that they engineer. And as soon as they engineer it, they've got the seeds of their own destruction in a crisis which is bound to follow. Let's put that to one side for a moment and just look at this cryptocurrency bubble on its own. Now, in my article, I suggested that because this is a global phenomenon, you could easily have, say, 5% of the world population punting in these things. Now, that's 350 million people. 350 million people punting in cryptocurrencies and making wonderful money. What are they going to do with it? They're going to spend it. So actually what's going to happen is that on the back of cryptocurrencies, any inflation which is in price inflation, which is in the system, is going to be very, very sharply exaggerated. And that will force the central banks to raise interest rates. If they don't raise interest rates, the market will force the rates up. And that will be the thing that finally does for the cryptocurrency bubble.
Yeah, so we'll get an inflationary, even a hyperinflationary event that will force people to hold on to what they lend, and rates will go up. I mean, hyperinflation will occur if the central banks don't take action, exactly,
or if they stop the markets pushing interest rates up. Yeah, but other than that, I mean, it'll eventually destroy the fiat currencies, in my view, simply because we've got all this debt at the moment. We have got so much in the form of deposits, even from the last crisis. Yes, the amount of money which is actually in the banks at the moment is just enormous. Imagine another wave of money on top of that. It's going to destroy the fiat currencies, I think, without a doubt.
Right, and you explained the dynamics before about how, when interest rates start to rise, the banks start losing money on their treasury holdings, and they have to get rid of them. They have to sell those treasuries and start making loans and putting it into the real economy. So you have all this high-powered money, and here comes Bitcoin and the other cryptocurrencies. Really very interesting. Alasdair, with just 3 minutes left here, maybe 2 minutes only, talk a little bit about GoldMoney, because you're on the board of directors, I believe, of GoldMoney. They have decided now to venture into to cryptocurrencies to a degree. I guess maybe just Bitcoin at this point in time. It is possible to buy Bitcoin and have it in your gold holdings account at GoldMoney. Talk to us a little bit about that. And GoldMoney may be uniquely able to provide, to reduce some of the risks, some of the unknowns. At least that's the way I see it. What are your thoughts about GoldMoney's venturing into it? It seems to me like it's a good idea from a business point of view, because you're bringing in, the possibility under one roof to exchange cryptocurrencies into real money.
Well, firstly, I'm not on the board of GoldMoney.
Excuse me, I thought you were.
But I'm head of research.
Sorry about that.
No, not at all. The question. Your question is actually a very interesting one, because the one thing that GoldMoney does is it reacts to where it perceives its customers are likely to be satisfied. And we're finding that a lot of people are very interested in cryptocurrencies. So this is an area which we should engage in. And we already take a fairly wide range of cryptocurrencies to swap for metals, for example. So, if you want to buy some gold or silver, then we will take your cryptocurrency. I have to say that at this stage in the market, I don't know, but I don't expect very many people are doing this. They're probably seeing wonderful profits on their cryptocurrencies and tending to stay with that.
Yeah.
But what we have done is we have started offering a facility where our customers can buy and sell Bitcoin. And that, if you like, from our point of view, is is a nice little earner. But from our customers' point of view, it rounds out our offering, as it were, because they can through us hold a range of currencies. They can spend in a range of currencies with preloaded debit cards. They can hold gold, silver, platinum, palladium, and now they can also hold Bitcoin. And Ethereum will be introduced fairly shortly. I think that the key point about it is that until now, if you had another agent holding your Bitcoin or your Ethereum, you had the problem that you couldn't be absolutely certain that whoever was holding your wallet wouldn't be raided by the authorities on suspicion of money laundering or incomplete know your customer documentation, all the rest of it. Now, we fully comply with that, and I think this is an important point because anyone dealing with us knows that we are properly regulated. We abide by the regulations, and therefore that risk is minimized. And I think that's very important.
I think that's very important, Alasdair. That's one of the attractions for sure. We are out of time. Thank you so much for being with us again. Always a pleasure. I hope we can do it again sometime real soon.